Well, good afternoon, everyone. David Griggs from the Metro Hartford Alliance. Welcome to another webinar for this ongoing crisis that we're all facing. Today, we have brought together another timely subject around the CARES Act that was just passed by Congress, signed by the President on Friday. We've assembled a few folks to help us understand what the implications are specifically for companies here in Connecticut. A quick disclaimer, we are not a paid professional. We are bringing you this information for your purposes to understand what the opportunities are. We do encourage you to get professional assistance if you are going to be asking very detailed questions. This content is intended for Alliance investors, but we fully realize that once we place this on our website, that anybody can access it, and we encourage anybody within our region to access this for your assistance. Speaking of our website, www.preparedhartford.com, that's in addition to our normal website, metrohartford.com, where you can find a link to preparedhartford.com. Preparedhartford.com is our COVID-19 response site, where we are putting a variety of resources at your fingertips, including recordings of all of the webinars that we've posted so far, starting from the very first one on Monday the 16th, where we brought together the SBA, CBIA, Hartford Foundation for Public Giving very early on in the crisis up to today, where we are going to explore the actual CARES Act and what it means for Connecticut businesses. We have today three speakers with us. Jevin Gibb from the Metro Hartford Alliance, our Director of Research and Economic Development, Patrick McGloin, partner at Gaffney Bennett, and Spencer Kane, President and CEO of Kane Associates. Each one will walk through a piece of the CARES Act for you to listen to. As you're listening to the webinar, if there are questions that you have, there's a chat window. Please click, if you scroll to the bottom of your screen with your mouse, you'll see an option for the chat window to come up. Click on that, type your question. We will do our best to answer all the questions after our presenters. If we're not able to answer your questions live, we will make sure to get back to you via email. All that said, I would like to hand it off now to Jevin Gibb to walk us through the first part.
So before we get started, one of the things that we want to cover is just an overview of all of the programs and resources that are now available to businesses to help overcome the COVID-19 crisis. We've covered these in a lot of our previous web conferences, starting with self-help. You know, a business has the opportunity or has the option of going to their creditors, to their landlords, to their banks to try to renegotiate debt obligations, to, you know, extend their cash runway and to kind of increase their business health in the short and long term. They can file for tax extensions, which have now been made available for everyone, businesses and individuals. Reprioritize spending, taking into account that certain things like utilities payments are not being required right now. And also think creatively about new revenue sources. And I think our restaurants are a great example of businesses that have begun doing more takeout and delivery work in order to boost those revenue lines because they've lost revenue from dining in the location. There are also state programs. And last week we talked with DECD about their Recovery Bridge Loan program. That program, even though it was expanded from $25 million to $50 million, has been temporarily or applications have been paused for that as of 6 p.m. last Friday night. The program has received more applications than it would be able to service. So DECD is working through that backlog of applications before it opens up the application process again. There's also some other labor-related programs that are being administered by the State Department of Labor. That's shared work for workers whose hours might have been reduced, and then unemployment for workers who have been laid off. Finally, when we think about federal programs, this is what we're going to highlight today. We have already talked about the economic injury disaster loans. The new program that's going to be added is the payroll protection program. There is the economic injury disaster loan grants. Sorry, as I pause, it's because I'm turning off people's video. But there's a $10,000 economic injury disaster loan grant that is going to come live in the next week. I talked with Marima Gutierrez this morning, and she said that that should come live in the next 48 hours. The last piece to think about when you think about federal programs is FFCRA. That's the Family First Coronavirus Response Act. And that's requiring that employees receive pay if they have to, if they're quarantined or if their kids' schools have been closed and they have to stay home if they're not eligible for telework. So from there, now that we've kind of covered the highlights, I'm going to toss it to Patrick to talk about the content that we'll discuss today.
Thank you, Jevin, and thank you to you and David and the whole team at the Alliance for keeping up a steady stream of really great information and content during a challenging time. Happy to be with you and the team and investors today, just to give a bit of an overview of the CARES Act and do a deep dive in a few different sections. Just wanted to kick us off with kind of a high-level overview of the CARES Act. It's actually the third piece of COVID-related legislation. The first of which was passed on March 3rd. That was a little over $8 billion in funding, mainly for health agencies and testing, as well as for small business loans. That was followed up on March 18th with a substantially larger bill. It was just north of $100 billion. That bill had tax credits for employers, had increased unemployment benefits, SNAP assistance, and things like that. The CARES Act that we're talking about today is obviously dramatically bigger. It's in the ballpark of about $2 trillion. Includes the checks to individuals, which we probably heard about, some specific funding for distressed industries, as well as loans, grants, and tax changes for businesses of all sizes. There was quite a bit of either bipartisan or partisan wrangling, depending on how you view it, but it culminated with a unanimous vote in the Senate on Wednesday the 25th, followed by a voice vote on Friday the 27th in the House. The House managed to narrowly avoid being forced to undertake a roll call vote. Went to the president's desk for signature on Friday the 27th. Promptly followed by the Congress essentially leaving town. The Senate recessed after they voted. They have a preliminary schedule to return on April 20th. That's likely questionable. The House has not set a date for when they might return. You've got 4 members of the House and 1 U.S. Senator thus far who have tested positive. So it's a very much a questionable date, as it is for all of us to try and wrap their heads around when they're going to get back to business. We'll touch on this a little bit further in the end, but the idea of getting back to business is going to be right on the top of the list, because this is the latest COVID-related legislation. It's becoming pretty clear on the part of a lot of stakeholders, first and foremost the folks in the Congress, that this will not be the last. Every now and then you hear this referred to as a stimulus bill, and in the interest of just sort of clarifying, it really is not intended to stimulate. It's essentially an emergency piece of legislation designed to stabilize and mitigate the impacts of the coronavirus. The two main goals of the CARES Act are essentially to keep workers paid and employed and help businesses to keep their staffs in place. And the bulk of the dollars are really going to healthcare system enhancements, economic stabilization, as well as emergency appropriations for the folks on the front line dealing with the coronavirus health response. So that's to sort of lay the groundwork for what it was that was undertaken as the CARES Act was getting passed and signed. And we'll talk a little bit later about what next steps after this bill would look like. But I think at this point, we're going to explore a little bit some of the areas of impact that are contained within the bill.
And so for there, Spencer, we'll have you handle the impact for individuals.
Sure, Jevin, can you go back to the previous slide? Hi, everyone. This is Spencer Kane. I hope everybody's doing okay. It's great to be here and just having a conversation with our fellow colleagues in the state. What I have done is I've sort of divided the bill up into these 4 or 5 major areas that I've used sort of in terms of my analysis. The CARES Act is a huge bill, 850 pages, contains numerous different public policies, appropriations, and expenditures. Let me just start out with the first one that we've heard a lot about, and that's individuals. So individuals are going to get rebate checks at $1,200, $2,400 for a couple, $500 for kids. The eligibility limits are $75,000 for the individual, $150,000 for a couple. These checks are going to come directly from the IRS. This is the same rebate program. I think we ran around 2009. I just would point out in 2009, it took 3 months to get those checks. We've heard 3 weeks. I'm somewhat skeptical of that time frame. I'm skeptical of all the time frames, but that one in particular, the IRS is very understaffed, and it might be difficult to get those checks out within that period of time. The other area that impacts individuals is family medical leave, which was in the first act that they passed and adjusted in the second act. That allows individuals to take family leave and sick leave for a certain period of time. And that you'll later on comes under some of the items connected to businesses. There's an advanced tax credit, which I'll talk about later, to cover that program. Just keep in mind, Connecticut has its own program. It's just beginning to be developed. There's a Family Leave Foundation. It has an executive director, and I think its start date is July of 2021. The other major area is obviously unemployment. Unemployment, which has been greatly expanded. Generally, unemployment, you have to have wages to be eligible for unemployment. They've expanded unemployment to 1099 workers, to sole proprietors, to other individuals that normally would not get wages. In addition to the usual 26 weeks, they've added another 13 weeks to that. And they have put a $600 bonus per week on top of whatever the unemployment compensation benefit would be calculated at. The other piece are loan forbearances, and I'll just throw this out there. The details are somewhat vague at this time, but there is a provision for loan forbearances for federally backed loans, which essentially means you could have you could be in default for 360 days through their process. If that loan is backed by the federal government, they would be paying it. So those are the major pieces related to individuals. There's some changes to the penalties on taking money out of 401ks and IRAs. Obviously, the tax delay to July 15th, and there's a delay in student payments. The next area relates to businesses. And in this area, in businesses, there's essentially three major programs where they have put substantial funding. The first one is the business loan program, which they're also calling the Paycheck Protection Program, which is kind of an extension of the SBA current loan program. That is funded at about $367 billion. That's businesses less than 500 employees are eligible for low interest loans and payment delays. And those loans can be used for payroll, for rent, for health benefits, insurance, utilities, and other expenses related to keeping a business in business. The key piece of that loan program is the forgiveness piece. If you maintain your employees, there's a formula by which you can be forgiven that loan that you've received under that program, and it's reduced for wage reductions and employee reductions that might occur, but it's based on a formula over a specific time period.
And Spencer, I'll give the details of that.
Okay,
later.
Great. The other piece is the emergency disaster loan program, which is funded at about $10 billion. That is sometimes called a grant program. To apply for that, it's the credit worthiness of the individual or business applying for it is probably as laxed as they can get, and that's really meant to cover short-term, again, rent payments, increases in the cost for the supply chain, payroll disruption, and sick leave, rents, and mortgages. And that also is open to businesses under 500, sole proprietors, independent contractors. The third major fund that was under this bill is the Treasury Exchange Stabilization Fund. That's at $500 billion. That's for employees, businesses with employees between 500 and 10,000. In that, for instance, is about $29 billion to help the airline industry. That's strictly a loan program, and that will be carried out by the Treasury through a number of programs that already exist in terms of providing credit and liquidity to businesses. There's about $454 billion that are going to go to loans directly to businesses through the Federal Reserve programs that are already established. Some additional areas are, as I said before, the advanced tax credits for FMLA. And let me just talk about advanced tax credits for a minute. Not a lot of people understand what they are. Advanced tax credits are a way to get money immediately to a business or individuals. They've been used extensively over the last, 8 years, 10 years, with the health exchange health programs, the Obamacare programs. They're the way they provide a subsidy to individuals against their premiums, and they're really paid up front, where most tax credits are sort of in arrears, are taken after the year is over. Advanced tax credits can be taken right up front, and that gives sort of immediate relief. There's also a payroll tax delay built in here at about, I think it's 50% of what you owe can be delayed over a period of time. And there's also an advanced tax credit at 50% for the first $10,000 of an individual employee's wages. So that would go right to the business right up front. There's also some enhancement of the of net operating losses that businesses might have taken over the years, and that's a good one to take a look at. I don't really have all the details on that, and you really need your accountant your tax people to look at whether that helps you or not. Those are the major pieces that deal with business, and obviously represent a good portion of this bill. There's a whole additional section to the bill. Those are all in what's called Division A. In Division B, there's extensive appropriations to probably over 30 federal programs, in excess of $200 billion to enhance those programs. Things like SNAP, paying for employment, unemployment compensation, grants to arts and culture. There's a $300 million appropriation to help the fisheries industry. There's many pieces to that individual federal agencies, many of them block grants to states that are with programs that already exist that will be expanded. In addition, there is some direct funding to the states. There's a $150 billion coronavirus fund, which has very little details just yet on how the states and local governments can access that fund. Connecticut is estimated to receive about $1.28 billion from that fund. And in the first act, there was an enhancement of what's called the Medicaid match, federal match, which increased the match for every state by 6.2%. For Connecticut, that's worth around $400 million. So Connecticut could receive up to $1.7 billion in revenue from the federal government that still needs to be specified. Yesterday, Connecticut was declared a federal disaster area. I don't know a lot about how that money is distributed, but from what I've read, essentially it will take care of 75% of the costs related to losses due to the coronavirus. And that's just came out. We just got that designation. And so that will be another funding stream to help us through this. I'll turn it back over to Jevin, who can go into more detail into the PPP program, which has a lot of interest.
Thank you. So at this point, what we want to do is a very practical deep dive into the Paycheck Protection Program. Without being glib, I think a lot of businesses have seen revenues decline due to COVID-19. In order to tread water, what they've done, and what many have done, is reduced fixed costs if and when possible, and slash variable costs. And we already saw the SBA introduce the economic injury disaster loans. This was intended to cover those operating expenses to try to keep businesses afloat as much as possible. Those, we're still waiting on the first round to get dispersed. The initial information that we received was that it would take about a month. I haven't heard of a company that has been dispersed yet. Please let us know if anybody has made progress or gotten feedback from the SBA on that process. The one update there is that as part of the CARES Act, the EIDL loan was added, or they added a grant process to that. Those are $10,000 grants that would be issued within 3 days of applying. I talked with Marima Gutierrez this morning about the timeline for when the SBA website would be updated to allow people to apply for those grants. I was told 48 hours. So hopefully by Wednesday, we can give an update to everybody who needs cash now while they wait for programs like EIDL and PPP to get them much larger amounts that will help them more in the long term. But as companies look to cut costs due to declining revenues, the temptation is to cut payroll to save during the crisis. What PPP does is it incentivizes companies to keep your people employed. And to kind of wrap our heads around the logic of this, if you can generate enough revenue to cover your non-payroll costs, this can step in and cover your payroll costs so that you can continue kind of staying afloat. For companies that have more revenue, this could actually be a windfall for them so that they use the federal money, which can then be forgiven to pay their payroll for 8 weeks. How this works with the other programs, we've had a lot of questions. The economic injury disaster loan was intended to cover operating expenses. And while payroll is an operating expense, the EIDL can cover the other operating expenses and be used in addition to PPP, because EIDL won't be forgiven. It's a low 3.75% interest rate loan over 20 to 30 years, but you can use PPP in the short term to cover 8 weeks of payroll. It changes the kind of business analysis to try to keep companies employing, or to try to prevent companies from doing layoffs to reduce their costs. In addition, there is the $10,000 EIDL grant. If a company applies for that grant so that they can get money quicker, that amount would be subtracted from the forgivable amount under PPP. And this is just saying you're not going to get the grant twice. They won't give you free money and then forgive your debt for that same amount on the back end. So let me move my slide forward. The big takeaway here is get in touch with your bank. The banks will be the ones that handle this loan, as compared to the EIDL, where the EIDL is being administered by the SBA. For eligibility on PPP, most businesses and nonprofits will be eligible with, so these are the ones with under 500 employees. A big new thing is that this includes many sole proprietorships and independent contractors. So availability of credit elsewhere is not an issue. So for EIDL, if you had credit available with your bank or other sources, you would not be approved by the SBA. Here, that is not an issue. There's no personal guarantee required. There's no collateral required. The interest rate is not to exceed 4%, although the goal is to get as much of this loan forgiven as possible. There's no payments for 6 to 12 months. That's depending upon the banks. The one bank that I've talked with, it was going to be no payments for 12 months or 1 year. And there's no prepayment penalty. So again, this is a loan where hopefully you get 8 weeks of payroll forgiven, but even if you don't get the entire amount of the loan forgiven, the terms of the loan are very generous. So what's the maximum loan amount? This is payroll. So this is your average monthly payroll times 2.5. And the 2.5 is because this is an 8-week program. So payroll times 2.5 up to $10 million. But the question that most people are asking is, what does payroll costs actually include? And so payroll costs means all compensation of employees, salaries and benefits, excluding annual salaries over $100,000, compensation to employees residing outside of the United States, and sick and family leave wages under the FFCRA, that's the Families First Coronavirus Response Act. There are a few other details in there, but I didn't want to get into the minutia. That's the high level requirements. And again, when you talk with your banks, they're going to talk with you about the application requirements and any sort of exceptions. So to get to the big deal, how much of the loan can get forgiven? So for the 8-week covered period, and this is covered period means the 8-week period beginning at the date of the origination of a covered loan. So once you get the money, for the 8-week period after that, the sum of payroll costs, payment of interest on mortgage, and that does not include prepayments or payment on principal. This is just payment of interest, rent, and utilities. One of the important things here, and I've received several questions, this does not include debt obligations. The Senate version included debt obligations. The version that got passed does not. So it sticks more to payroll and less of those things. Also importantly, the amount forgiven will be excluded from your gross income, so it won't be taxed. That being said, the amount forgiven will be reduced by the percentage difference in average numbers of full-time employees for the covered period in 2019. So for example, if you employ 10% fewer employees in your 8-week period in 2020, than you did in 2019, the amount forgiven would be reduced by 10%. Also, by the amount of any pay cuts in excess of 25% for employees making less than $100,000. So there, if you have higher level people making over $100,000, that won't count. They're not counting toward the payroll costs anyway for this program. For your folks under $100,000, if their pay gets cut by 25% or more, the amount of that cut will be subtracted from the amount eligible to be forgiven under this program. But our takeaways and our action steps for you is get in touch with your bank, ask for application requirements. And we saw, I've seen in the chat window already, the SBA has a list of approved banks. Most of your banks will be eligible. If they're not, they'll tell you that and then figure out which bank you need to work with. The second, the kind of homework that you can do while you wait for banks to figure out how they're going to administer this program, document your average total monthly payroll costs for the previous year. That's what's going to be used for the formula here. So you need to go through your tax documents. You need to go through your financial documents and calculate the monthly payroll costs for each month over the previous year, and then find the average. And so that will be your average payroll costs. Third, plan your payroll costs for this 8-week covered period. Not everybody will bring back their entire staff. You may receive a reduction, but figure out what works for you. That's homework that you can do before the banks get this program started. And also look for the EIDL $10,000 grant applications. But again, it looked like in the chat window, someone said this was posted. Hopefully it is, but we should see it at least within the next 48 hours. And you'll see the website here that you can go to. So if you have additional questions, we'll handle them in the Q&A, but now I will hand it back to Spencer.
Yes, the other area I just wanted to mention was that in the area of healthcare, there's I think over $200 billion for hospitals, healthcare facilities, first responders. There's you know, I'm not exactly sure because it's in multiple places, but there's billions of dollars for prescription drugs, for research, for getting them to the population, and there's quite a bit of funds for testing as well, and to get the supplies needed for our healthcare providers. That is a very big, substantial piece of the CARES Act as well. I'll throw it back to Pat.
So I think we're pretty much through everything that we're looking at with the information that we have now. As I'm sure a lot of folks on this call are aware that you typically pass a bill, even in the context of something like the CARES Act, that the legislation by itself does not get the full lift done. You need regs promulgated, agency interpretations, and particularly if you're seeing some of the questions we're getting about what's happening with the SBA programs, you need agencies to define guidelines. So we're hearing as early, for example, as as Wednesday, that SBA may have guidelines out for the Paycheck program. But I think that the caution, regrettably, is going to be patience. It's going to take a while for some of these details to really get winnowed out, and it's going to take a little bit of time. Spencer made a reference to the fact that the IRS is ballparking 3 weeks for individual payments going out. The IRS essentially had to clear out their headquarters due to COVID cases. So now the entire IRS workforce, for example, is now, in DC is now working remotely. They got an additional, I think, $100 million, for example, in IRS funding to try and manage these influxes. But when you look at what's happening on the unemployment side, for example, Department of Labor, both on the federal level and across states, are now going to be swamped. Systems that are not designed for it, staffs that are not ready for it, and their own workforce impact it's going to call for patience. So I think as implementation details become available, I know the Alliance is interested in getting their hands on that and sharing it with investors, and be happy to support that process as well as information becomes available. The one thing I just wanted to mention, I kicked this off at the beginning, that we're probably not looking at the end of federal action to mitigate the coronavirus impacts. This is closer to a marathon than a sprint. So I think that we're probably going to be seeing probably a fourth COVID bill that seems to be a little bit of a foregone conclusion. There's a little bit of an interest of waiting to see what this massive bill's impact will be, but there's not going to be a ton of patience on the public to allow Congress to sort of hang back and take the measure too much. And there's a lot of interest on both sides of the aisle to make sure that this legislation and any subsequent legislation has the impacts that we're looking for. So I think you could probably look to see additional focus in addressing the direct payments to individuals. There have been a lot of conversations about the $1,200 amount, if it's going to be sufficient. Jevin's point about the 8-week duration of the Paycheck program, if the economy is still suffering or having these adverse impacts from coronavirus, there's no point in doing it for 8 weeks only to fall off a cliff at week 9. The state and local governments are going to be front lines of really dealing with a lot of these impacts. The $150 billion that went to state and local governments, that was what National Governors Association essentially described that as the bare minimum. It was about $100 billion short of what the U.S. Conference of Mayors was looking for. And then the obviously businesses that may have been dealing with a slowdown in economic growth to begin with are going to be looking at even more challenges. So you can likely see additional resources being pointed at businesses of all sizes. I think one of the sobering stats as we're looking ahead at both coronavirus mitigation legislation as well as the potential, once we get on the other side of this, getting past coronavirus mitigation and into economic stimulus, would be the stats that we saw last week on unemployment. Basically 3.3 million new claims last week, which is basically five times higher than the level of claims that were seen during the Great Recession. So we're probably just at the beginning of some of these economic data points that are going to really speak to the need for both additional COVID legislation as well as stimulus looking a little bit further out. But there tends to be a pretty solid agreement on both sides of the aisle that making sure to avoid the worst case scenario economically is really going to be avoiding that stems from the most robust attempt to manage and mitigate the COVID issues first. So I think that's sort of the review and the look ahead. And I know we've got a lot of questions, and Jevin, I'll throw it back over to you.
Oh, sorry, I was muted. I see that there have been a lot of questions in the chat window. What we're going to do is we'll go through those kind of top to bottom, and let me make sure that I have unmuted my colleague Margot, who is going to help us go through those questions. Margot, do we have you?
Yes, we do. I'm here.
Great. So we will continue. We can go over a little bit past 2 p.m. if we have a bunch of questions. So with that, Margot.
So the first question we have is from Chris, and he's wondering if guaranteed payments to managing members of LLCs count toward payroll calculations.
I'm going to have a cop-out answer to a lot of these, which is talk to your bank. The banks are going to get into the details of here, and I think Patrick really hit this. We don't have all of the details for administering these loans yet. So let's figure that out. And I think we'll probably figure that out in the coming week. When we figure it out, we'll try to post something to the website, preparedhartford.com.
Okay. So the next question is, are salaries over 100,000 excluded or capped at 100? And related to that, the question, a similar question was, is that 100 $100,000 cap, does that include benefits or is it just salaries?
I think, and this is, we're going to make sure we're going to send a 3-page flyer that explains all of this. So I don't want to get into the details and tell you something wrong. I think it's 100,000 salary, not including benefits. And those wouldn't be included. It's not prorated. Patrick or Spencer, have you heard something different?
I have not. I'm looking through the section by section analysis of the bill to see if I can come across anything, but I have not been able to find anything. That's as you said, Jevin, that there's a number of issues, questions that we're going to need further guidance from those agencies that are administering this, and legislation can only go so far. You usually have regulations to implement. There's going to be emergency regulations. They've waived the administrative procedures process on regulations. So we're going to see guidance very quickly. But even after guidance, we still may have some questions, but that would certainly be one of them.
Okay, next question, Margot.
Yep. Next question comes in from Melinda, and it says, are business owners on payroll included as well?
This was actually the question to my dad this morning, who has an LLC in Texas and is applying to it. He was not including himself because he doesn't actually collect a salary. It's a pass-through for his income. And at that point, it's difficult to understand what's going to get counted as salary or not. And I'd say, again, apologies for not having the answer for you here. But that is something that we're going to have to figure out over the next week.
Okay. So for small nonprofits without employees, is the EIDL application still possible?
Will you ask the question again, Margot, please?
Yep, so I'm reading it exactly how it was written. It says, for small nonprofits without employees, is the EIDL application still possible?
So EIDL and PPP are different programs. EIDL will be administered by the SBA, will be dispersed by the SBA, whereas PPP will be dispersed by your bank. For EIDL, that's meant to cover all operating expenses, not just payroll, and many nonprofits will qualify there. Just as an example, a 501c6 like the Alliance does not, but most 501c3s will qualify for EIDL. For PPP, it looks like almost all nonprofits, including a 501c6, will qualify, and so that'll cover payroll. Margot asked me the question one more time to make sure I answered all the parts of it.
Yep, it just said for small nonprofits without employees, is EIDL application, is it still possible? Yeah,
and then the last piece that I would say there, yes, EIDL is possible. For PPP, even one-person businesses can qualify. That's a big piece here. So if you're working on a 1099, this opens up. So PPP is a much more inclusive, expansive program than EIDL. So next question, please.
Next question is, how do PTEs impact the calculation?
Part-time employees,
yes.
This is about the full-time employees. What we can do is, we'll look for the part-time employee information, but those are not what are getting used, at least in the legislation right now, to make any calculation. Patrick, have you seen anything on part-time employees for this?
I can't say that I have. The bulk of what I've seen is calculations all around the full-time status employees.
Yeah.
I do think part-time employees are eligible for unemployment compensation, though.
They are, and if they've had their hours reduced, there is shared work.
Right.
But again, so when the payroll for part-time employees, and again, we'll follow up on this on the website and in the email that we send out after, I think it still counts for payroll, the calculation that we're looking at is to figure out how much can be forgiven is going to be about the comparison of full-time employees in 2019 and in this 8-week covered period. So by my understanding, you could still use your disbursement amount to pay for part-time employees. It's just not going to be used as part of the calculation for the forgiven amount. And I'm going to go up in the slides to talk about what payroll is. So it's all compensation of any employees. I don't think this is just limited to full-time employees. So Margot.
Are we
Next.
ready for the next question? Yep.
Please.
So this next question is related to the EIDL. It is the EIDL $10,000 grant available only to businesses that have completed and been approved for it, or is that a separate grant for which businesses can apply?
So my understanding, and we'll see when the website goes live, is that you have to apply for EIDL in order to also apply for the EIDL grant. That being said, the EIDL $10,000 grant will be dispersed from within 3 days of the application. You have to make some certifications that you're filing in good faith and that you'll use it right. But you do not need to be approved for EIDL in order to receive the grant. And just by common sense, they can't approve or decline you within 3 days. So you can everyone is going to be eligible for that $10,000 grant. And then if you do the $10,000 grant and the PPP, that's where the forgiven amount would be reduced by that $10,000 grant size so that you're not double dipping. When I say everyone, remember it's businesses that are eligible for EIDL. So you've still got to be a business under 500 within the business types that are mandated for EIDL. And I see from Aaron Knight that the website is up, which is awesome. So if you go to the EIDL website, it looks like that application might be live. Next question.
Yep. So we kind of already answered that one. All right. So the next question is, this person is a business owner. However, their facility is part of a larger facility, and the landlord has closed it, which forces the business owner to physically relocate. And they're wondering if they can get assistance for this while at the same time keeping employees on payroll so that they have money coming in. So in essence, they were forced to close. Yeah, go ahead. You got it.
I mean, remember how this breaks down. So EIDL can help you with operating expenses. So no capital expenses, but it can help you with operating expenses. So that can be subsidized. The EIDL grant can help subsidize that in the short term. And then PPP can help with payroll. So your relocation cost could be put into your operating expenses, and then keeping your employees on the payroll goes into PPP. And the issue to go over here is to make sure that in that 8-week covered period where you're using PPP for payroll, make sure not to double dip and use your EIDL disbursement to cover that. You have to keep them separate. But yes, you can cover those expenses those ways.
Okay, that actually kind of leads right into the next question. And I guess this is just for clarification purposes. Judy is asking if she can get both the federal SBA and the PPP, and can she do both the state bridge loan once it reopens and the PPE, or does she have to choose one or the other?
No, that's the beauty of this. You don't have to choose. And when we had Gwendolyn Thames, Deputy Commissioner Thames on Friday, she was very explicit about this. The bridge loan hopefully will get dispersed before the EIDL. And the purpose there was the bridge loan would be a small cash infusion, which you would then prepay using your EIDL. and then your EIDL is not does not disqualify you from PPP. So you've got all of these little pieces of the puzzle, and that's why, you know, we created this screen. All of these pieces work together, and they're not mutually exclusive. You just have to be a bit sophisticated in making sure that you're managing and planning your expenses to match the disbursement amounts and the disbursement purposes that you agree to.
Great. I think we already answered this one. I'm going to ask it again anyway, just to be on the safe side. It's like, what is the PPP look back period in terms of determining the total payroll baseline?
It's looking back a year.
Yeah, that's what I thought. Okay, perfect. The next question has to do with a small employment company with no employees that lost several jobs over the, oh, wait a minute. I have a small entertainment company with no employees that lost several jobs over the next month. Will my LLC qualify for SBA loan to cover lost revenue?
So again, they're not, what they don't want to, they're trying to help reimburse you for operating expenses so that you can continue operating. So they're not just going to give lost revenue if you shut the doors. The idea is to keep you afloat. And even if you, changing gears to talk about the PPP here, even if you don't have a lot of employees, PPP can be just for one employee.
Great. All right, so next question is, are nonprofit Medicaid providers excluded from the 7A SBA loans?
Ask it again, please, Margo.
Yep. Are nonprofit Medicaid providers excluded from the 7A SBA loans?
That's the PPP.
Yep.
I don't think so, but again, get the conversation started with your bank.
That's something I think we got to check at. I'm not sure who asked that question, but
Yeah, it's Kathy, but I don't have Kathy's last name.
yeah, we need to check on that. There's some exclusions for Medicaid, you know, those who are providing Medicaid services, and I don't know exactly what they are.
Okay. And those are the only, yep, she just said thank you. Those are the questions I have thus far.
So I see one, following some of the comments, there is a question about where is the application for PPP and what site is that located on. Again, that's not going to be a government website. That will, PPP comes directly through your bank of choice.
Perfect. And we just got another question in from Mary Ellen. Recent staff change has resulted in a significant reduction in payroll from 2019. Can they still make an adjustment for the PPP?
So I think the answer there is generally yes, but let's step back to look at it. Your 2019 numbers are used as your baseline. If you're saying that you're going to maintain that reduced staff number, then what they're saying is they will reduce the amount that can be forgiven by however much you reduced the staff. Essentially, they're only going to forgive the amount of money you spend. They're not going to forgive the amount of money that you spent in 2019. So if you go back to the homework that we recommended, when you start talking to your bank, you need to look at, document your average total monthly payroll costs, and then plan your payroll costs over the 8-week covered period so that you can understand what your maximum loan amount is and what the maximum amount is that could be forgiven so that you match those up as best possible.
So we've gotten a few more questions have popped in. Let's see. The next one comes in from Alan, and his question is, our nonprofit performing company lost a gig and we paid 50% of the artist fees. Is this covered under PPP?
So it sounds like this is something that occurred in the past, and past costs aren't going to be under the program. the costs that PPP is intended for is that 8-week covered period from the date of disbursement. So that's whenever the banks are able to start dispersing these, you're going to be forgiven for that. That being said, if you're underwater because of having to pay that 50%, your ability to get EIDL and PPP will keep you afloat going forward.
So the next question that came in has to do with banks. And it appears that they're still onboarding their staff with PPP. And so they're wondering, does anyone know in the banks, which banks are already on board to take the application? And the other part of that question is, when will the banks be briefed on this so that they'll be prepared to accept applications?
So this gets to Patrick's point about it's going to take a while for banks to figure out exactly how they're going to administer this. They know about it, but keep in touch with them. I mean, you know, call them daily, however many, you know, until you get an answer on when they expect to be able to work with you.
And Jevin, just on that point, you know, we've heard, don't cast it in stone, that could be as early as Wednesday that bankers are receiving this. The Treasury Secretary left it a little bit open in declaring the week of March 30th for when those guidelines would be issued. But I think your point about getting that initial homework done and having that on your desk and ready to go when you're reaching out to your bank is going to be really, really helpful to get the process started and you know, watch for those guidelines coming out hopefully sooner rather than later this week.
So there are two questions again related to the PPP. One is asking, does the 2019 PPP baseline need to include overtime hours for full-time or for overtime hours for full-time hourly employees is my guess.
Yes, that's going to be included in payroll costs.
All right, and related to that, paid tips are also, would they also be included in the payroll look back?
I think so. And let's put a note on this because there's an actual section in the legislation that applies to workers receiving tips. So Chris, apologies for not having the precise answer, but we'll get back with you on it.
Great. David is asking, why shouldn't he apply for both the PPP and the EIDL?
There's no reason. Apply for both. Just make sure that you organize how you're tracking your expenses and make sure that you're not using EIDL for the same expenses as PPP. Keep those separate.
Okay. There's another question, just clarification. Did you say that part-time employees are not included in the payroll calculations or forgiveness?
No, their pay should be included in payroll costs, but they're not going to be included in the calculation for the percent forgiven.
So Jevin, it looks like they're supposed to be included in the application, so that should be part of the information that gets assembled.
Yes, I think so.
Great.
Okay, so there are several more. Another clarifying question regarding business owners that may own and pay themselves as employees of their own business. They've been told by different parties, this person's been told by different parties to apply for unemployment, but I can't cover myself via PPP. Are business owners, operators not eligible? And he apologizes for still being a little confused.
So figure out which one would pay you more and think about the time, the window that you'd be available to get paid. It's quite possible that your current salary is higher than your unemployment benefits would be. So you could use PPP for 8 weeks, and then if the crisis continues long-term, hopefully we have another package that gets put out. But once you've exhausted that 8 weeks, then you could switch to using unemployment. But if your unemployment benefits are higher than your salary, obviously that might be a better option. And remember that as part of the CARES Act, and Spencer, how much did unemployment get plussed up as part of the CARES Act? Was it another 500 or 600?
600 hours a week.
Yeah.
Okay, so here's another one. In the coming months, many concerts and shows will be canceled. And will lost income be covered by the organization by any of these?
So again, I haven't seen any of these set up to reimburse you for losses. What they're trying to do is keep you in business. So they're looking at operating expenses and payroll. So I think the answer to that is no, but there are funds made available so that you can offset that by continuing to work in the future.
All right, a couple more questions regarding the $100,000 cap. So one is, are employees over 100,000, are they not eligible for PPP? And then the other one is asking, we clarify that employees are paid over PPP. Are they capped at 100,000? Is that?
So the, let's go back up. So payroll costs, and this is where payroll costs are important, is looking at the loan amount. So the annual salaries for people over $100,000 will not be included as part of payroll costs, which then gets used to calculate that maximum loan amount. When we look at how much of the loan can get forgiven, they will also not get used for the sum of, and this includes payroll costs. That being said, my understanding is you are allowed to use this for payroll. It just, those salaries won't get used for the loan amount or the amount forgiven. And if you need it, you know, you won't have enough loan dispersed to also pay for the 100,000 plus employees and everybody else. So if you pay the high salary people and not everybody else, you're going to lose even more because you'll get less forgiven. That's how they set it up.
Okay. It's now 2:04. We want
Right.
to keep going.
So let's go ahead and close out. The one last thing, I see one question about EIDL and the grant. If you've applied for EIDL, you have to go online again and apply for the grant. So from there, and I'll say one other thing that I saw in the chat window. Yes, don't take my advice to call the banks daily. Eventually they'll get very annoyed by you. Keep in touch with your bank and ask them when you should get back in touch. And usually they'll be very responsive to tell you, we should know by this date. We'll go through all the questions that have been asked and make sure to address them on our website, www.preparedhartford.com. We'll also reach back out to everybody who has attended this web conference, and we'll let you know about web conferences that we are having in the future. I want to thank Patrick and Spencer for making themselves available today and for their expert advice. And with that, everybody stay safe, and thank you very much for joining.